I guess if we have a look at Brambles, this is the third quarter update that's come out, and if we have a look at the actual numbers, nothing's really changed too much from the first half numbers that we saw not too long ago. We saw third quarter sales revenue up by 4%, up by 6% on constant currency terms, and they're the same type of increases that we saw in terms of the first half. They've come out to reiterate their full-year guidance. It's once again the same as we heard in the first half, $1.03 to $1.06 billion. Now, if we have a look at Brambles as a business, we know that the CHEP Pallets is the bulk of its earnings. It's a strong cash generator, but if we have a look at its core market of the US and Europe, conditions are still difficult there. It does have that new business of the reusable plastic crates, so hopefully we'll start to see some growth coming through from that new business, but altogether it's the CHEP Pallet part which is the area that is providing the growth for Brambles. So on the back of this, I don't think we are going to see many investment houses changing their recommendations on the stock. It has had a good run, and I guess the weaker Aussie dollar, also good news for this stock. But in terms of the actual third quarter update, in the year to date, we have seen sales up by 4% and up by 6% on constant currency terms. So really no change from the first half numbers.
Evan, let's talk Air New Zealand. Full year 2013 normalised net earnings a range between 235 and 260 million Kiwi dollars. How does that square with markets' expectations?
Yeah, look, it does certainly squares quite well. Obviously, the other sort of headline figure is that they are obviously doubling earnings for this full year. It does also look like they've managed to also increase sort of the numbers of passengers they're seeing as well. That's up well and truly as well, and obviously does put an extra sort of competition driver into that sort of trans-Tasman trade. Obviously, particularly Qantas obviously has a very good trade with New Zealand, and that's also something that will be interesting sort of on sort of a cross-Tasman idea to have a look at. But the numbers certainly look very strong. Obviously, it will probably see the stock really jumping hard, because it is obviously good to see finally that transport stocks, particularly those airline stocks, are actually starting to see increased volumes, even with the fact that they are under pressure from high dollars, both obviously over New Zealand to the US and also the Australian dollar here on sort of a historical basis. Really good story out of New Zealand. Obviously, it will mean that sort of transport space is one to watch. Obviously, we saw Virgin yesterday doing the tie-up with Tiger, and then today we saw Singapore Airlines obviously coming out with their tie-up to adding their additional stake in Virgin as well. So the one thing that will be very interesting with all that sort of transport space, particularly those airlines, there is rumours around that there may actually start to be a direct line from Sydney, particularly into Mumbai or also New Delhi. It'll be very, very interesting to see what happens, particularly to Singapore Airlines if this happens. A lot of their revenue comes from the Sydney to Singapore, Singapore to Dubai, or also on to New Delhi. And if they sort of lose that revenue, it will make obviously those plane wars ramp up even further again.
Yeah, the stock is up about 10% in NZ so far this year, and out of the gate they're gaining almost 6%. You know, in context, Julia, with domestic carriers here, particularly Virgin, and its trading patterns today off the back of good gains yesterday, how do you see its, I suppose, market share story evolving now for that trans-Tasman route?
Well, in terms of the share price action, Air New Zealand has been an outperformer compared to the likes of Qantas and Virgin. We have a look at Air New Zealand over the last 52 weeks. Over the last year, the stock's up a massive 71%. Now, that compares to Qantas, which is up by 10%, and that compares to Virgin, which is up by 17%. So altogether, we have seen a pretty good performance coming through from Air New Zealand. And if we have a look at Air New Zealand, it is the New Zealand premier air carrier for both domestic as well as international flights. Now, we have seen a few changes in terms of that New Zealand market, in that Virgin Blue exiting that domestic market. Probably good news for Air New Zealand, but passenger numbers up by 5.2%. We actually saw capacity decreasing here, down by 1.2% for Air New Zealand, and that's quite different because over here in Australia we're actually seeing more capacity increases, and while competition is still strong in New Zealand, we're actually seeing our national carrier increasing in terms of capacity. If we have a look at one of the interesting things to come out of this March update for Air New Zealand today, it is that demand from Asia, Japan, as well as from the UK actually managed a drop of 19.5%, and that looks like it's because China's flying into Shanghai and it's dropped the Hong Kong to London route. So altogether it does look like there's been a few changes there, but altogether the share price performance of Air New Zealand, a very impressive one. I guess here in Australia we have a lot more competition coming through from some of those low-cost carriers coming out of Asia.
Julia, let's go to Billabong. We're hearing that there's an extra period in which the Sycamore partners can discuss basically the offer, it's supposed to be 60 cents, but even with a 1% bounce today, the shares are at 49 cents. The market obviously does not think this is going to come off.
Well, given that we've seen so many bids failing in the past, it's understandable that the market is a little bit nervous around this bid at 60 cents by Sycamore Partners. Now, we have seen the date extended out for these talks to continue on, and I guess from Billabong shareholders' point of view, they're hoping for a higher number than 60 cents. It's been a turbulent 18 months where we have seen TPG, Bain Capital really dropping out of the race for Billabong, and of course, Billabong itself, in terms of its business, we've seen a number of profit downgrades coming through and write-downs coming through as well. So an extra 10 days, shareholders will be crossing their fingers, because if this bid does not materialise, then a possible capital raising to shore up its balance sheet certainly on the table.
Evan,